Hey everyone, and welcome. Today we're diving into something really powerful from the ICT trading world called the market structure shift. Seriously, understanding this one signal can help you spot high-probability trend reversals with incredible precision. It's one of those concepts that can completely change how you see the market.
So let me just ask you something. What if you could see a major turn in the market just as it was getting started? Get a real head start on a brand new trend. Look, that's not some fantasy. The key to unlocking that is right here. It's understanding the market structure shift, or MSS. It's like the market's first real hint that the script is about to flip.
So what is it, really? Well, at its most basic level, a market structure shift is the first credible sign that a trend is running out of gas and is probably going to turn around. So in an uptrend, it's when the price breaks below a key recent low. And in a downtrend, it's just the opposite, a break above a key recent high. Think of it like the first crack you see in a dam. It's a big deal. Okay, but here's the thing you've got to remember. Not every little break of a high or low counts. A lot of them are just noise, those annoying fake-outs designed to trap you. A true high-probability MSS has two and only two key ingredients that tell you the institutional smart money is actually behind the move.
The first ingredient, and I mean this is non-negotiable, is a liquidity sweep. Almost every real reversal kicks off with price making a quick dash to grab liquidity. This is often called a stop hunt, and it's the setup for the real move that's coming next.
So what's actually going on here during a liquidity sweep? Well, price pushes just past a recent high or low, and in doing so, it just vacuums up all those stop-loss orders that are sitting right there. A great analogy is to think of a big institution refueling its tank. They're basically filling up with orders from people getting stopped out and from eager breakout traders jumping in before slamming the car into reverse and speeding off in the complete opposite direction.
All right, so the tank is full, now what? We need to see ingredient number 2, displacement. This is the proof. This is the confirmation that tells us the move is for real and that serious institutional power is now in control.
And displacement, well, it's pretty much what it sounds like. We're not looking for a gentle little drift here. No, this is an explosive, energetic, high-momentum move. You'll see these big, full-bodied candles with tiny little wicks. It's a sign of overwhelming force. This move is so aggressive, it often leaves behind an imbalance, what ICT calls a fair value gap, and we'll circle back to that. This displacement is the engine firing up on that new trend.
Now this is where a lot of people get tripped up. Traders often get market structure shift, break of structure, and change of character all mixed up. They sound kind of similar, but they mean totally different things. So let's just clear the air right now and get this straight.
This table breaks it down really simply. First, you've got break of structure, or BOS. This is all about continuation. The trend is still your friend, and a BOS just confirms it's still going strong. Then there's CHOCH, a change of character. This is like the first little whisper of a reversal. It's an early warning. But the MSS, that's the main event. It's a much higher confidence signal because it's a confirmed reversal backed up by that liquidity sweep and that powerful displacement we just talked about.
So here's the bottom line. A CHOCH is kind of like seeing smoke on the horizon. It's a warning, right? But the MSS, that's like seeing the fire trucks race by. It confirms the situation is real. It takes that initial warning from the CHOCH and adds the hard evidence of displacement and a liquidity raid, giving you a signal you can have much more confidence in.
All right, so we've got our signal. We know how to spot a real MSS. Awesome. But now what? How do we actually trade this thing? Well, that brings us to one of the coolest and most precise ICT entry models out there, the unicorn.
You got to remember this rule right here. This is the heart of the unicorn model. It's all about confluence, right? It's about stacking the odds in your favor by finding that perfect overlap of two specific things that show up right after a valid market structure shift. When you find these two together, you've found something really special.
So piece number 1 is the fair value gap, or FVG. Remember that big, explosive displacement move we talked about? Well, it often leaves behind this little pricing imbalance. It's a 3-candle pattern where the market just moved so fast it literally left a gap in the price action. And these gaps act like magnets. Price just loves to come back and revisit them to rebalance.
And the second piece of our unicorn puzzle is the breaker block. Basically, it's a spot where price used to bounce, right up until it didn't anymore. After that liquidity sweep, price just smashes right through this old support or resistance level with that big displacement move. And when that happens, that old floor can become a new ceiling
or vice versa. It's a flipped level, and it's now a huge point of interest.
Okay, let's put it all together. It's a simple step-by-step recipe. First, you need that liquidity sweep. Check. Second, you got to see the market structure shift with that strong displacement that leaves behind a fair value gap. Check. Third, and this is the magic part, you find where that FVG sits perfectly inside the range of the new breaker block. Check. And finally, and this is super important, you don't chase. You wait patiently for price to come back to you, into that high confluence unicorn zone.
So how do you actually place the trade and manage your risk? First off, your entry has to be patient. No FOMO, no chasing. You wait for price to pull back into that FVG/breaker zone. Your stop loss is simple and logical. Just put it on the other side of that breaker block. If price goes past that, the idea is wrong and you're out. And for your target, just look for the next obvious place where liquidity is sitting. See, it's a whole system from A to Z built right on top of that MSS signal.
All right, let's do a quick recap of the most important takeaways here. First, MSS is your #1 high-probability signal that a trend is reversing. Second, a real MSS needs two things: a liquidity sweep and that powerful displacement. Don't forget it. Third, remember the difference. An MSS is a confirmed reversal, kind of like a CHOCH with superpowers. It is not a BOS, which is about continuation. And finally, the unicorn model is your go-to strategy for a high-precision entry after you've spotted a valid MSS.
Wow, we have covered a ton of ground here, from spotting that first little hint of a reversal all the way to a full-blown trading strategy. The power of the MSS isn't just about drawing lines on a chart. It's really about understanding the story the market is telling you, the story of what the big players are doing. So now you know how to read the opening act of that story. The only question is, which chart are you going to go look at first?